If you received a Form 1099-DA this year, you need to watch this. Let's break it down. The 1099-DA is brand new. It is the IRS's first real attempt to standardize crypto reporting from centralized exchanges. But here's the problem. Most people don't understand what this form actually reports, what it does not report, and how dangerous it can be if you file your return incorrectly. Here are 3 deadly mistakes we are seeing. Mistake number 1, thinking the 1099-DA shows your taxable gain. The first mistake is assuming that the 1099-DA shows how much money you actually made. It does not. The purpose of the 1099-DA this year is to report proceeds or sales. That means the total amount you sold, not your gain, not your profit, just the gross sales amount. Let me give you an example. You bought Bitcoin for $100,000. Later you sold it for $80,000. You actually lost $20,000, but your 1099-DA shows $80,000 of proceeds. If you report that incorrectly and don't include your cost basis, the IRS's system will read that as $80,000 of taxable gains. That is how someone with a real loss ends up looking like they made a large profit. And yes, we've seen situations where the IRS initially claimed someone owed millions of dollars more than they actually did because cost basis was not properly reconciled. Mistake number 2, not reconciling transfers between exchanges or wallets. Mistake number 2 is the one triggering automatic IRS mismatch letters. If you transferred crypto between exchanges or moved it into a hardware wallet and then back into an exchange before selling, your cost basis is very likely to be wrong or missing on the 1099-DA. Exchanges only reliably track cost basis if you bought and sold entirely on that platform. The moment you transfer assets in or out, the exchange may label that cost basis as unknown or various. But remember, the IRS still receives the proceeds number. So here is what happens. You transfer 5 Ethereum from a hardware wallet into Coinbase. You originally bought it years ago for $5,000 and you sell it for $15,000. Coinbase reports $15,000 of proceeds, but if cost basis is not properly reported on your taxes, the IRS's system may treat the $15,000 as a gain. That mismatch between what the IRS sees and what you report is what triggers letters. This is already happening with W-2s, 1099 NECs, and 1099Ks, and now 1099-DAs are entering that same automated matching system. Mistake number 3, filing directly off the 1099-DA without splitting 8949s properly. The third deadly mistake is filing your tax returns directly off the 1099-DA without properly preparing Form 8949. For 2025 reporting, each exchange that issues a 1099-DA should generally have its own matching 8949 section so proceeds align correctly. Then you also need to separately report transactions that are not included on any 1099-DA. That includes DeFi, self-custody wallets, certain token swaps, and other non-broker activity. If you lump everything together incorrectly, your totals may not match what the IRS computers expects. And when totals don't match, the IRS's system flags it. That is when you receive a CP2000 notice proposing additional tax based purely on proceeds. The IRS does not need to audit everyone manually anymore. The matching is automated. If your return shows $10,000 of gain, but the IRS sees $100,000 of proceeds and no clearly matched reporting, you can expect a letter. And responding to that letter after the fact, it's much more stressful than filing it correctly the first time. This is exactly why 1099-DA reporting is not a DIY situation for many crypto investors. If you transferred assets between exchanges, used hardware wallets, participated in DeFi, or traded high volume, you should not assume the form is correct or complete. At Gordon Tax, we reconcile proceeds, we reconstruct cost basis, and we split reporting correctly by exchange to ensure that your 8949 matches what the IRS system is expecting to see. We also represent clients on audits, mismatch notices, and high-stakes crypto reporting matters every single day. If you receive a 1099-DA and are not completely confident in how you're filing, schedule a consultation with our team before you submit your return. It is much easier to prevent a problem than to fight one later. The 1099-DA is not the enemy, but misunderstanding it is. If this video helped clarify what is happening, subscribe for more crypto tax updates and share this with anyone trading crypto this year. And if you want this done right the first time, you know where to find us.